Good day viewers, good day everybody. Today we are going to be analyzing EURUSD, and I'm going to be sharing my thought process on a possible trade I saw today. Although I was not tagged into this trade. I was not tagged into this trade, but I just want to share my thought process and my overview of what I am seeing in the market. So I'm doing this video for educational purposes only. So going straight to the chart, today is Thursday. I'm currently in Nigeria, and today is Thursday, the 30th of October 2025. So first, before I begin my analysis, before I can place a trade, I first look to the daily chart and what happened in the previous day. You can see, okay, let's start from Monday, that was the 27th of October. You can see the line I put on my screen. Monday, I really don't know what Monday was. An indecision day. Also Tuesday, the same thing. Wednesday, the market closed with a bearish engulfing candlestick. So looking at the structure, looking at the previous structure, it broke and price retested it. Price came to retest, and also it has been within that range in price, and it has not been doing anything since. So seeing Wednesday with this bearish engulfing candlestick, look at this other red candlestick. These are called directional candlesticks. So looking at these candlesticks, you can see it's a retracement. There's nothing, it's just a doji, an indecision candlestick. So looking at Wednesday 29th October 2025, the market closed with a bearish engulfing candlestick below the previous low and also below the Monday's low. So it identifies that the bears are more in the market. So Thursday I'll be anticipating for lower prices, at least to the previous low. Otherwise my internet is not good. At least to the previous low. Guys, let's just wait for my internet is really slow, so can you just bear with me for this little moment? Okay, it's back. So I want to anticipate price to reach this low, or price also can come towards this low, which it has already did. And also price can also hit this low. It all depends on how much of sellers are and how much of the momentum of sellers are going to be in this market. So okay, with the analogy that this candle, this is our directional candlestick, telling us that the next candle, which is going to be on Thursday, it's most likely going to be bearish. So with this in mind, I go over to my 4-hour time frame. Wow. All right, going over to the 4-hour time frame, it's seeing that price is making lower lows and lower highs. So yesterday was Wednesday came down 20 this is 10 o'clock candle. This was the closure. This was when the market closed, the New York session closed. So I identified this zone as a zone I'm interested to see sellers in this market. I was really anticipating to enter this trade, but I was hot. I was not tagged into this market. But you know, that's one thing you're going to face as a trader in some point. It's not every trade you're going to catch. But I'm still going to share the video to tell you my thought process in viewing this trade. Okay. The daily, you have to analyze. For you to be profitable in the forex market, you need to reference your trades from the higher time frame down to the smaller time frames. That is called a top-down analysis. So we can see that previous day, Wednesday, was bearish, signaling that there's going to be more bears in the market the next day. So, and also confirming the bearish movement is swing low, lower high. That's a bearish structure. So as you can see, the bearish structure, sorry guys, lower lows and lower highs, and also another lower low. So this is my point. This is an order block. It's called an order block. So it's another block is a point of interest where I know there's going to be more of selling momentum in the market if it's for sales, also vice versa for the bullish side. So today I identified this H4 zone as my major zone of liquidity. So going down to my H1 time frame, going down to the H1 time frame, price Thursday, that's Thursday, when this is the close of this New York close. This is the New York close. That's when the Wednesday candlestick closes. So this from this line here, this is the Asian session. So during the Asian session market, the market retraced, and 5 o'clock, that's 5 a.m., that is UTC1. You can see my time here, UTC1. This is London session. London. Let me change the timing here. Let me change it to London session, because I start my analysis. I like trading both the London session and the New York session. So okay, that is Nigeria is 1 hour ahead of London. So but let me put it in London. So this was 4 o'clock candlestick, London session, and you can see how price came down. You see how price reacted to the zone, down to the previous low. So I really wanted to take this trade. I wanted to take this trade around because I woke up around this time, around 8 o'clock. That's London time. That's 9 o'clock. I started checking the chart around this time. So looking at this, this movement was not actually what I wanted in the market. So when I saw this candlestick, this was when I was interested in the market. When I saw this candlestick during 9 o'clock London session, that is 10 o'clock Nigerian time, I went down to my 5 minutes time frame to catch an entry. So let me see, the 9 o'clock, to catch an entry. So the price came down, it closed below this low. Now I was interested in entering the market, but this was my entry point. My entry point was here. My entry point was at this point, with my stop loss above this high. With my take profits, I was initially targeting 2 risks to reward. So but price, you see how price did not actually tag me into this trade, and you see how beautifully the trade went. So I missed out on the trade, but yeah, it's what it is. It's not the end of life. We are still going to catch more trades. So I hope you guys understand my thought process and the way I view the market. You have to trade from the top down analysis. You go from the daily. I know that the previous day was bearish. It's signaling in my head that Thursday, that is Wednesday, was bearish. It was bearish, closed bearish. That signals that Thursday also high probability is going to be bearish, and I take that idea and I look for bearish scenarios in the lower time frame using the H1 time frame and the H4 to pinpoint strong zones where the price is going to react from. So I hope I made myself clear, and I hope you also learned one or two from this video. So thank you for your time. If you watched this video to this moment, thank you for giving me your time. We are going to see in the next video.